Hi, you're watching ET Markets Live. I'm Neha Vashisht Mahajan from the Economic Times. Welcome to another episode where we are going to discuss all about stocks in focus today. I have Mr. Kranti Batini with me. He's an equity strategist at Wealth Mills Securities. Thank you so much, Mr. Kranti, for joining us today on ET Markets Live.
Thank you, Neha. Thanks for inviting me on your show to share my market views with you and with all the viewers of ET Markets. Thank you.
So let's quickly start our session for today. I selected a handful of stocks that are in focus and in news. Let's start with the first one, which is GAIL. So GAIL has been in focus recently. What are the key triggers driving this stock right now? And how do you see the outlook in the near to medium term?
One thing, Neha, GAIL has been in a consolidation phase in the recent past, and also the valuations looks compelling at this point of time. The stock valuations comparatively, it looks
Hmm.
attractive at this point of time. And also the PSU stocks have been in a consolidation phase from a quite a long time. So that makes the GAIL to look at this point of time. The relative valuations for GAIL looks attractive, and also the last quarter results have been quite modest and flattish kind of a thing. But given the kind of valuations and also uh, the expected rally in PSU stocks, makes
Hmm.
GAIL at this point of time some kind of a momentum what we are witnessing in the medium to short term in GAIL. For the
Okay.
longer term investors are concerned, one can buy for a time horizon of more than 1 2 years. One can accumulate
Hmm.
GAIL, okay, in this price range.
All right. So, moving to our next stock, which is Dixon Technologies. So, Dixon has also seen some movement lately. Uh, if we take a look at today's number, it is up around 1.53% as of now. So, what's your view on its current valuation and future growth trajectory?
Uh, Neha, in terms of the valuation of Dixon is concerned, this is a stock always trades at a trades at a high valuations. Given the
Mm,
kind of nature of the business and also the domestic manufacturing theme is concerned, Dixon is one of the key beneficiary. Uh,
mm,
Given the kind of current quarterly results, also the company posted a strong set of numbers,
yeah.
and the future prospects and the long term scope for this stock is quite strong. The segments they are entering, also new segments that are going to increase their further revenue expansion. That's what Dixon is witnessing at this point of time. The entire
Mm,
Dixon is running on a theme of make in India and also the production incentives. That is the theme that is leading Dixon in the medium to short term. Definitely, any buy on Dixon, okay, the stock valuations looks always richly placed. But any
mm,
dip in Dixon Technologies is concerned,
mm.
the high risk appetite investor, one can add a Dixon in their portfolio.
All right. Let's also talk about defense stocks. We have spoken about defense stocks a lot lately, and we did see a great rally recently as well. But several defense stocks like Cogent Shipyard, Idea Forge, GRSC fell in today's session, or maybe we can say investors booked their profits. However, HAL has seen a decline post UBS downgrade as well. So, what is your outlook on the defense pack overall? And do you agree with the cautious stance on HAL?
Uh, uh, Neha, given the kind of stellar rally what we witnessed in the last fortnight, these stocks
Hmm.
have almost on an average they risen around 30 to 40% from their recent lows. So,
Yeah.
given the kind of a rally, we are witnessing some kind of profit booking, and in fact, defense stocks are in a overbought zone. Uh, that is the reason we can see some kind of a heightened activity in defense stock. I'm quite sanguine with respect to the long-term prospects of these defense stocks are concerned. Right now,
mm,
defense space, I can say it is overheated right now. Uh, we have different types of segments that are coming in defense.
yeah.
Taking the large cap defense stocks are concerned, like the names like Cochin Shipyard, Garden Reach, Mazagon Dockyard, and Hindustan Aeronautics. The I can say the flagship companies of defense are concerned. Uh,
Mm,
uh, these stocks are also witnessing some kind of profit booking. Any dip in these stocks, okay, it's a good buy for the longer term investors. Despite of downgrade by UBS on HAL is concerned, uh, any dip in HAL, definitely it's a definitely a warranted buy for the longer term investors, given the kind of a strong order book they carry, and also the strong earning visibility on a longer term perspective. HAL still
mm,
I would be the net buyer on every dip. But the segments
okay.
like the drones, like Idea Forge and all, I'm quite specific with respect to the stocks are concerned. We need to see
Mm,
very stock specific in nature, how the order book earning visibility, how the profitability. These are the key factors I will be looking for the other stocks. By and large, the defense sector looks strong yeah, for a longer term basis. So the still these companies
mm,
carries a strong order book and strong order book visibility. So for a medium to short
okay.
term, because we witnessed a strong rally in the stock, stellar rally in the stock, there is nothing wrong taking some profit from the table. But definitely, any dip is a good buy for the new investors who want to enter into these stocks.
Okay. So one more follow-up question I have is that recently I was going through defense company, large cap defense stocks like BEL, BDL, Mazagon, Dock Shipbuilders, HAL. And I couldn't help but notice the PE ratio of these large cap stocks. So for HAL, it stood around 36, BEL was around 49. Then BDL was 113. So if an investor is, even if that person is in for defense for the long term, what parameters should the investor look at, and what is the standard for when it comes to PE in terms of defense stocks?
Yeah, very interesting question, Neha. Neha, see, we are at a different dimension in terms of that defense space is concerned in India.
Hmm,
And
hmm,
there is a strong fundamental shift that taking place in the defense industry as a whole. 10 years back, if you ask me, Kranti, tell about any defense sector or defense story, we don't have a defense sector in India. But over a period of past 10 years, we have a defense sector as a theme to invest for the investors. Uh, that
hmm,
is the fundamental shift we witnessed. And from a net importer of defense equipment, the Indian nation is concerned, Indian economy is concerned, we have become a $3 billion around it comes to 24,000 crores of defense exports India at this point of time we are making,
hmm,
and this is
hmm,
expected to go up in a multiplier way in the coming years. So one is the domestic spending of the defense is concerned and modernization of defense industry is concerned. This is one of the key trigger, and also the export of defense is concerned. The recent
hmm,
the escalation what we witnessed between India and Pakistan definitely helped Indian defense companies to exhibit their capabilities for the all the major global players in the world.
yeah.
The way our technologies have evolved and the way we demonstrated our capabilities definitely makes Indian defense companies quite attractive in terms of the
Hmm,
pricing is concerned when compared to the any kind of a the Western players, and also we are better positioned to export to other countries also over a period of time. So we are at a shift. So in terms of the PE,
hmm,
yeah, the ratio is concerned. Of course, some companies carries a high PE ratios. It is, I can say, out of the way also sometimes. But we need to
hmm,
look into that. What kind of a uh, greater opportunity these companies carries, and
yeah.
what kind of margins. And some companies are Neha, they are monopolies in their segment in India, and also they would
Hmm.
be ranked one of the top three or top five player in the global arena. So that's where the high valuation matrix come into the picture. One need to look at these companies in a stock specific way, what kind of order book
Okay.
and what kind of margin profile these companies carries. Definitely on a macro fundamentals are concerned for these companies. Some companies
Hmm.
they justify the valuation, some companies may not justify the valuation. So one need to
Right.
observe in a very very stock specific way. But these companies have a strong order book and strong order book earning visibility. And some companies do carry a strong margin of around 40 to 50% EBIT margins also these companies are carrying. That is the reason these companies have some kind of a high valuations, PE ratios at this point of time. Neha. So one need to be very stock specific while selecting defense companies in terms of the valuations are concerned. That is the reason uh, any dip on defense companies, definitely a buy. Dip is very important. You should not chase the stock. One investors all of a sudden everybody wake up and trying to chase this rally. That's where the problem
Hmm.
really comes. Whenever there is a softening of the valuation, whenever there is a dip in the stocks, it's a very good entry level for the investors.
All right. So moving on from defense stocks, let's also talk about railway stocks right now. So rail-related stocks like Titagar, Rides, and Jupiter Wagons have come under pressure lately. Do you think this is a short-term correction or a structural concern when it comes to railway stocks? And what is your view on the sector as a whole?
Yeah, Neha. This is one of the other interesting domestic centric sector what we witnessed. And
Hmm.
the last 3 4 years, whatever be the many of these companies what you named, they have given on an average 100 to 200 percent of returns. So they given a strong set of returns for the investors. So after that, these stocks are in a consolidation phase. I
Hmm.
can say these stocks run ahead of their valuations in many of these stocks are concerned. So there is a strong order book visibility and earning visibility, and still the railway theme is on. The execution theme is on. These companies also carries strong order book and also earning visibility. But what we witnessed is majority of these companies have run up ahead of their valuations. That is the reason we are
Hmm.
witnessing some kind of a consolidation. So any sharp declines in railways, I can add
Hmm.
in the portfolio for dips only. Uh,
Okay.
and at this point of time, there are some stocks like Titagar Wagons, RVNL. Okay, these are the
Hmm.
strong themes that still carry some kind of earning visibility in the coming quarters also. So I would be the net buyer in railway theme at dips.
All right. Let's also talk about some individual stocks. Another one I've chosen is Vari Energies. So, Vari Energies has been on the radar as well. I want to understand what's driving the investor sentiment here and how do you see its positioning within the renewable sector or the solar space?
Yeah, the overall the sector looks very interesting, Neha, but the momentum has been slowing down for the this entire green space and also the
Mm,
solar energy theme is concerned. Majority of these companies have strong order book, but here we need to see how they are going to execute these orders and how they are going
mm,
to maintain the margins and also the profitability. This is the key crux for these entire solar energy space is concerned. But one thing what we are witnessing is some kind of a slowdown in the momentum, and also these
mm,
stocks are come up with a highly pricey valuations. So that is a one area concerning area for these companies. The momentum is slightly slowing down. So to maintain this momentum, we need to see a strong earning visibility. That's where some kind of a missing part for these companies. So I'm a little bit cautious about these companies in terms of the valuations are concerned. Uh, if you ask Granthi, you'd be buying these companies. Definitely, I try to be a little bit cautious with this entire space is concerned in a medium to
mm.
short term perspective.
All right. The last stock for today is Mobikwik. Mobikwik fell over 5% in today's session after reporting Q4 losses. Do you believe this is a short-term reaction, or does it reflect deeper structural challenges for the company as the company is relatively newer in the markets?
Uh, Neha, the company listed at a high valuation, but it could able to get the listing gains for the investors. From there onwards, we can see uh, the fizzling out of these rallies, and the stock is at almost all-time high.
Hmm.
The This is a kind of platform business which would be suitable for the high risk appetite investors. But what the missing portion for these companies is the profitability, and also the earning outlook is obscure for many of these companies. So I try
Hmm.
to avoid the kind of names like Mobikwik on a medium to short term perspective. Uh, and also, I would be interested in these companies when they post strong set of numbers. Till the time, I try to avoid these companies.
All right. So we're done with the stocks in news part. Let's also close our session with one little note of what's going on in the markets right now. So today we can see the Sensex is down around 596 points, and Nifty is also on a downtrend. What do you think is happening in the markets right now? Auto banks are under pressure in today's session. What is your suggestion to the investors on how to look at markets in the current scenario, and is it something serious?
Neha, last 1 week, we market witnessed a strong resilience. Market could able
Mm,
to go above the 25,000 level, but we are losing the ground at 25,000 level. That's where
mm,
we are expecting some kind of a consolidation. But right now, the next level to witness is 24,750 for the Nifty. If Nifty could
mm,
able to sustain these kind of a level, we could able to see Nifty trying to attempt again the range of previous high, that is around 25,250, 300. That is the range. Market need to
mm,
attempt that range again. Overall, Neha, market is in a consolidation phase. We had a strong earning season. We have a we had a pull of inflation. By and large, Indian market is at a very sweet spot. The domestic numbers looks quite promising at this point of time, and the recent earnings season also has been a decent earnings season. The mid and small cap stocks posted a good set of numbers. That's where
mm,
the resilience what we are witnessing, and the global geopolitical and also the trade wars have been cooling off at this point of time, and foreign portfolio investors could able to uh, pump in around more than $7 to $8 billion in the recent past into Indian markets. These are the investors
mm,
who are quite I can say quite vary about Indian market valuations just a couple of months back. So the
mm.
foreign portfolio investors have been coming back to Indian markets at this point of time. So by and
Right.
large, markets are entering into a consolidation zone at this point of time. Uh,
Mm,
and what we are point to look forward is how the behavior of the foreign portfolio investors in next couple of days, that makes the market to sustain at this point of at these levels. So by and large, what we are going to witness is a stock specific action and a sector specific action. uh, One thing, Neha, any dip on Indian market is a
mm.
very good warranted buy for the longer term investors.
Well, all right. This marks the end of our segment for today. Thank you so much, Mr. Kranti, for taking out time and joining us today on ET Markets live stream.
Thank you, Neha. It's always my pleasure to share my views with you and with all the viewers. Thank you.
Thank you so much. Thank you, everyone, for joining us.